Tesla's stocks have drawn much attention, especially since Cathie Wood and ARK Invest made significant profits as early investors in the stock. The CEO of ARK Invest, Cathie Wood, is famous for investing in flashy stocks, and she has been bullish on Tesla since the beginning. And for 2022, she has said she would go all in on Tesla stock. Wood's firm, ARK Invest, owned more than 250,000 Tesla shares. Although she has been offloading some of it, she is still a firm believer in Tesla and predicts that the company's stock will increase to $3,000 by 2025 after selling 20 million vehicles within 5 years. Today, we will look at why she's doubling down on Tesla stocks. What does Wood's prediction mean for the legacy of automakers? Let's find out. Cathie Wood, the creator, CEO, and chief investment officer of ARK Investment Management, has established herself as a formidable brand in the ETF sector after her groundbreaking ARK Investment Management produced excellent outcomes in 2020. Cathie Wood is no stranger to making aggressive bets on Tesla. She recently featured in an interview where she discussed the tech sell-off in innovation stocks. She also addressed fiscal policy, monetary policy, the economy, market signals, economic indicators, and innovation, as she usually does. Let's talk about Tesla stock for a bit before discussing Cathie Wood's predictions on what to expect in the future. Cathie Wood plans to invest her personal money in Tesla, and we'll see her reasons later. Currently, Tesla stocks sit at $1,029.96. The first week in 2022 was pretty rough, and the company's stocks went down by 10.57%. Some of the most exciting news for Tesla stock is that the Tesla Austin Gigafactory may be opening soon, and manufacturing of the Model Y is likely to begin within the next 7 to 10 days. They've made some vehicles to test it out, and they've been driving them around to see whether those vehicles meet their standards before they start mass manufacturing and delivering to people. An essential feature for this Tesla model that will be released in Austin is that it will have 4,680 batteries, which are highly crucial for Tesla cars since they offer a longer range, can be charged faster, and are less expensive for Tesla to make. This is critical for Tesla to begin employing these 4,680 batteries while building the Model Y and Tesla Giga Austin. Another piece of news that came out is that Elon Musk tweeted that Tesla will be increasing the amount of money that it will charge for its customers who want full self-driving features for their vehicles, raising the price from $10,000 to $12,000. Several individuals have gotten the complete self-driving function for Tesla for less than $10,000, and Tesla makes progress when the software is upgraded. So as they get closer and closer to full self-driving, they will raise their costs. Elon Musk discussed in a recent interview how full self-driving level 4 might potentially be achieved in 2022, and when that happens, we anticipate Tesla to raise its costs. But now, let's get back to Cathie Wood and what she said about why she went all in and effectively spent the majority of her net worth in her approach. As we all know, most of her initiatives are geared toward disruptive innovation. These equities have been hammered over several months. They're down more than 50 to 75%. She emphasized that the firms she's invested in are really at a very favorable price point level. They're in a highly valued zone right now for investors to purchase. They could potentially be going up pretty soon, and she expects to return up to 40% in 2022, a massive return compared to last year. So there is still uncertainty going on with the overall stock market with the federal government. You know they're potentially going to be spiking rates pretty soon, even sooner than expected. So that is going to be one of the most critical factors to watch out for the overall stock market for Tesla and ARK Invest. We love ARK because they're bullish on Tesla. They're the ones that got super aggressive on Tesla before everyone else started to jump on the Tesla bandwagon. One of the reasons she's heavily invested in her strategies is the long-term returns for ARK Invest. The past 5 years were terrific, and she returned more than 200% with her design. Not only does she invest investor money, but she also invests her net worth in her strategies and disruptive creative firms. When you look at the ARK Invest strategies, you know they invest in 3D printing and cryptocurrencies. They also have several ETFs. In her latest reports, Cathie Wood anticipates that major automakers GM and Ford would struggle with gross margins as they lost their market share. ARK Invest launched out 2022 by doubling down on some of her favorite growth business, hoping to come back after her funds lagged in the market last year. Her portfolio grew in 2020 owing to innovation-focused purchases, including Tesla. The ARK Innovation ETF achieved a remarkable 153% return in 2020, but is trading down 21% in 2021. While Wood is convinced that the epidemic is boosting innovation, she is skeptical of the current increase of traditional manufacturers such as Ford and General Motors. According to her investor webcast, Ford and General Motors are up 18% and 6% year-to-date, respectively, significantly surpassing Tesla's 3% loss. This is a continuation of 2021 patterns, with Ford jumping to 137% as opposed to Tesla's surge of 50% last year. Ford stock reached a 20-year high after the company revealed intentions to boost its electrified F-150 to 150,000 vehicles by 2023. General Motors stock price rose when it showed an electrified version of its best-selling pickup truck. The Silverado electric vehicles are only about 2% of their sales, and she wondered if the other 98% are on their way out as consumer demand turns towards electric cars. She stated that the consumer sentiment, rising used car inventories, and the alleviation of the microchip shortage indicate that the new vehicle sales slump that is yet to be recovered isn't just a supply issue. They soared on those electric vehicle announcements. Think about it. That's ridiculous. Wood went on to say that electric vehicle sales account for only about 2% of traditional automakers' sales, with the rest driven by gas-powered vehicles. Wood believes that Tesla and electric-forward manufacturers are better than conventional automakers. For example, businesses like Ford or General Motors might report a surprise loss by 2023 due to more significant investment to transition to electric vehicles and decreased demand for gas-powered cars. Wood believes conventional original equipment manufacturers were too little too late, and that electric cars will continue to eat into the market share of gas-powered machines. While GM and Ford stocks have improved in the previous year as investors acknowledge their efforts to transition to electric vehicles, electric vehicle production is not something the legacy players are used to doing because they were born in the industrial gas-powered period. She also stated that Tesla is on track to capture 25% of the global automobile market in 3 to 5 years with a 20% to 25% market share. Tesla may sell around 20 million automobiles by 2025. On the other hand, Tesla sold slightly less than 1 million automobiles. Last year, Cathie Wood defended her forecast by pointing out that Tesla already has a 60% share of the electric vehicle industry in the United States and a 20% share internationally. In her firm's previous analysis, Wood expected Tesla's electric vehicle market share to fall as new electric vehicles were introduced to the market. Still, to ARK's surprise, Tesla's share of worldwide electric vehicle sales is holding steady or growing, giving ARK the confidence to be even more bullish on Tesla. In contrast, GM sales decreased to 44,697 units during the third quarter of 2021, down 218,195 units from a year ago. They're blaming it on semiconductor supply chain disruptions, although Tesla sales increase quarter after quarter. One important thing to remember is that the electric vehicles require 10 times more chips than internal combustion engine vehicles, even though Tesla's sales increase every quarter, demonstrating what consumers demand. GM has the wrong product at the moment. The two most prominent manufacturers globally are Volkswagen and Toyota, both of which have multiple brands under a broad umbrella and produce roughly 10 million vehicles each year. This means that if Wood is correct, Tesla will take up the whole market share held by the German and Japanese behemoths. Although Wood's projection is thrilling for Tesla supporters and investors, Tesla's stated objective is to produce 20 million vehicles per year by 2030. Tesla's significance as an automotive company is undeniable. Tesla's influence undoubtedly shifted many legacy car companies to consider electrification as a potential outlet for growth and evolution. One of the reasons is to save money on petrol, and gas prices are at an all-time high. Citing a few instances does not appear to do Tesla justice. Instead, Tesla has converted an untold number of people to electric powertrains. The company's sales continue to grow year after year by introducing new models, new technologies, and improved public awareness of the benefits of driving an electric car. Do you think Tesla can sell 20 million vehicles before 2030? Comment down below.